Pips Wizard Pro is a brand new indicator designed for making maximum profit from big price movements. It shows two different lines. Blue line indicates a buy signal and orange line, sell signal. On top of that, whenever a new signal is generated, Pips Wizard Pro can alert you via email, pop-up with sound or push notifications sent to your mobile. Absolutely no repaint. If you get a signal, you can be 100% confident that the indicator will not change it. Pips Wizard Pro is designed to help you make stable profit with big confidence and no stress.
So I received an email from a marketer who was pushing this product called Pips Wizard Pro, and I went to the website, I checked it out, and I thought this looks kind of interesting. Very, very basic, very, very simple. So I reached out to the developer, and I said, look, I review stuff, and I want to see a copy of it. I'm not just going to review your sales page or make up some BS like a lot of the marketers do online. I'm a real trader. And you know what? There's more than one way to skin a cat. So he was kind enough to send me over the product, and after he saw my website. This is the 19-page PDF. I'll get back to this later. So, quite frankly, this is what it looks like. This is it. You apply this to your chart, and these little things start showing up. So let's quickly walk through this. I'll cover other currency pairs and other currency time frames later. I just wanted to give you the rundown of this product here. So whenever you see the blue form, you're going to enter, and your entry price is going to be the close of the candle. When you see this, if you're in a long trade, you can exit, and this is actually a short trade right here, okay? To go short. You can see this is a daily trade. These are huge moves. And actually, it's quite impressive considering that this is the Euro-US dollar, that we've been in some choppy price action for quite a while. Okay, so this is what you get. Now, you're probably thinking, well, how do you make money with this? Well, when this thing this formed, you would look for the closing price here, and you would sell, and you would get out when the blue candle forms, when the blue triangle forms, or the diamond. I don't know my shapes. Same thing over here. On the close, you took some heat, and then the trade dropped in your favor. Now, there are certain profit targets, and there are certain stop loss numbers that you can use, and they come in the PDF. They also show up on the alerts. Let me see if I can grab you an example of the alert. So here's what it looks like. This is an example is the Euro Japanese Yen 15-minute chart. A buy at 117.77. This is your take profit. And this is your stop loss. Okay, you can see it all through here. Now there are set profit targets. There are set stop losses as well. So here's what's recommended on different time frames, depending on what time frame you're trading. You have on your 15-minute, for example, you got a 2-to-1 reward to risk ratio. Over here, right? It's the same thing. 2-to-1, that's not bad. You hear a lot of people say you gotta look for 3-to-1. It's not accurate. You could do very, very well with a positive expectancy system at 1-to-1, or just a little bit more than 1-to-1 to cover any sort of costs that you may have. 1-to-1's fine. 1 to 1.5 is fine as well. When you see marketing, 3-to-1, 4-to-1, 5-to-1, good luck getting those with any sort of consistency. You're not going to. And overall, just because you think you've got a 3-to-1 reward to risk ratio, doesn't mean you're ever going to reach it. Okay, so keep that in mind. This is very conservative, and I kind of like that. Okay, I'm not a huge fan myself with setting these like this. I like to use price and structure, but totally viable way of doing it is what we're looking at right here. Okay, so quite simply, you enter your trades when the blue diamond appears right there. You sell when an orange diamond appears right there. That's the way to do it as well, right? You're always in the market this way. You got to be careful with that because you can get stuck in some choppy price action. But again, it's a valid way of trading. A lot of traders trade that way. They're always in. For exiting trades, it talks about using the opposite trading signal, which we just covered right here. Number 2 is a take profit level. That's shown in the pop-up alert window. Like I said, I haven't had my own alert window pop up with this, so I really couldn't tell you that. Option 3 is another exit mechanism, is exit near strong support resistance levels. You guys probably guess that that's probably be one of my preferred method. So that's not bad, depending on, of course, your time frame. Here's the time frames that it covers. You've got 15 minute, 30, an hour, 4, and daily. I like this as well. So if you're a swing trader, you're looking in through here, right? Day traders can trade in through here, and an hourly can actually be a little bit of both. And here's the currency pairs that they recommend. Japanese pairs are a little more risky to trade on. Absolutely. There's a reason why they call the British pound against the Japanese yen the dragon. I don't know if they still call it that, but that's what they called it when I first started trading. Here is the custom. You can actually customize this indicator. I kept everything the default. All right. You've got different trading styles. This is quite cool. I don't know exactly what it does to change anything. It's all in the PDF. Not something I would actually do. Take profit, stop loss. You can see it's already put out here. A whole bunch of different things you can use here. I'm not going to cover this right now. If you buy it, you can do it yourself. So just for an example here, you've got this trade would go up. Now, I'll be honest with you, I'm not exactly sure when this would show up. Okay, I'm not exactly sure. But if you're just trading structure, you know, we'll take this one here. This is a 368 pip trade on this trade here, long, right? We're looking at structure. We talked about that as one of the ways to do it. You're getting out on this level here. I got right to it. If you're selling, I'm not sure exactly what we have over here on the other side of the chart. So we sold here. You've got this level here. And let me just crunch the chart up a little bit more for you. You've got this. You've got this level here. And you've got the bottom swing down here. So let's just put these lines in here just so we can have something to look at. I'll just do that one too. So you've got a few different exits here. Obviously, this first one you're not going to use because that's where you got in the trade. You're looking here is 190 pips. Over here is 377 pips. Wow, that's not bad actually. Can't argue with that. Now, if we go back to that page, we're looking at a daily chart right now. We're looking at 200 pip stop loss, 400 pip take profit. I know a lot of traders are going, that's a huge stop loss. No, it's not. You only think it's huge because you probably have a small account, and this will give you a really small position size. You want to have bigger stop losses. Too many of you probably get knocked out on noise. And we're looking at 400, right? So here's our trade entry here. It rallies against us 124, plummets down here to 301, right? We didn't get our 400, but if you're already up this far, are you really going to let this pull back all the way against you? I would hope not. And it still doesn't take you out, and it would you'd be out around here. But hopefully be looking at this going, okay, well, we're breaking. Oh, actually, sorry. Let's get that right. Let's give you the right information. We've got that blue diamond right here. So this trade here would give you 255 pips on that one right there. And then this one would give you, like, depending again, you're using structure, you got over 300 pips. If you're using this, you know, you basically got break even. This trade here, again, depends on what you're doing. If you're trading structure again, you do have that line there to look at. You have 211 pips there, and if not, this could have been a losing trade for you. But you know, it's something I want to talk about, and it's just normal price action, and every trader should understand this. When you get these kind of moves down here, these big thrusting moves, if you're looking to take a counter trend trade to these big moves, not a smart move. Generally what happens after these big drops like this, you're going to get a flag, and you may get this same move here projected from here down. All right, so this is the euro US dollar, and given the recent euro US dollar strength, that's quite possible as well. Let's just grab another pair quickly, pound US, and let's go down to an hourly chart and see what would have happened. This trade here, close it here. You get out here for about 57, 58 pips. So you can see it's pretty, actually this is a nice trade here too. You get in through here, and this one just collapsed. This one collapsed. Now, remember, this is an hourly chart. Over 100 pips right there. But if you look back here, looking at the hourly chart here, you might, well, there's your 100 pips right there. I'm sorry, that's a stop loss. 100 pips right there. And you get that. So anyways, you know what? The best thing you could do is just click below, get a copy of this. You got to register the product as well. And if you refund it, it stops working. So if you're one of those, you know, low-class people who just buy stuff and download it and keep it and charge back, you know, A, hope karma comes up back and bites you in the ass, and B, for this product, you're not going to be able to use it. So that wraps it up. You know what? If I get some comments, I'll cover some more information about this product. Click below.
Click the link below to order Pips Wizard Pro now and get your discount.